Richard Hirsch, you've been having a look at the latest quarterlies from the United States, and from the chat we had a moment ago, you love Apple.
I love Apple and I love Google, Alec. I think Apple continues to perform and shine. I think the potential of what they can do in China, they're only scratching the surface. I think from a valuation point of view, it's certainly not demanding at all. It's well below the S&P 500 and Dow PEs. And yeah, I think it's a stock you got to stay long and you got to be involved in.
Why do you think it is so cheap relative to the market overall?
These types of stocks that dominate, I think the market is always a little bit more wary that when they lose their domination or they lose their flavor, they can come off quite hard, and they're probably never going to get right up to the type of valuation where the average PE in say the S&P 500 is. So there's always a little bit of caution with them, but when you look at the cash generation that they continue to pile on quarter after quarter, coupled with what they can do in China, stay long.
Okay, so Apple's one for the long-term portfolio. We might actually have to include that in the Biz News portfolio too. But what about Google? That's in the portfolio. It's 15%.
Don't sell them. Mm-hmm. Don't sell them.
What about traders though? Could you trade that stuff?
Without a doubt. So looking at Google, it's in a really nice trading range actually. 525, 530 up to about 560, 565. It's come down towards the 535 level at the moment. A little bit more weakness in markets. You could see it below 530. And for the speculators out there, certainly not a bad entry point at around 530 with an exit strategy of around 550, 560 most certainly. In a CFD, contract for difference, you can make some healthy returns.
So if the rand weakens and the Google price goes up, you kind of double up.
Correct. Yep.
Richard Hirsch is with WebTrader.